What if I told you that the way most business owners calculate their revenue is both incomplete and backwards? I speak to business owners all the time who generate revenue first and then try to figure out what they can afford to spend out of what's left over for profit. And that's backwards. And it's incomplete because it ignores what the business actually needs to generate to support the business owner's life, their expenses, and all their obligations. Your revenue shouldn't just be based on only what you happen to bring in. It should be based on what your business actually needs to support your life and your business. Full disclosure, I was doing the same thing. But I knew that wasn't sustainable, so I had to figure it out. And in this video, I'm going to walk you through the 8 steps I use to build a reliable revenue number, one that supports my life and my business. Hi, I'm Jennifer Bright, Chief Financial Storyteller at Bright Ledgers. I help establish service-based business owners understand the story their numbers are telling them so that they can build a business that supports the life they desire and deserve. And if their business supports their life will support their business, because those two things must always be mutually aligned. The 8 steps I'm going to walk you through today are built into what I call the True Revenue Target Calculator. So let me show you how that works. So this is the True Revenue Target Calculator, and you can access this by visiting calculator.financialstorytellers.com. So there are 8 steps, and the first screen shows you the instructions, and it just walks you through the things that you will need to be able to calculate your number. And down here is a disclaimer. Don't worry about being perfect. Okay, this is a working calculator. You can change the numbers as you go, but you can get to an exact number, or you can get to an approximate number. But the goal is for you to see what those numbers actually are so that you can know what your numbers are. So the first step is personal expenses. And I'm going to make this I'm going to show you some features here, but I'm going to make this a little bit easier as we walk through today. In this section, you can, and in all the other sections where you have expenses, or you are filling in something, expenses, or your revenue and your pricing, you have the option to upload a file. You can download a template that shows all the expense categories or the categories, and you can upload those all at once, or you could do each section individually. But if you hit this download template button, it'll give you a pre-formatted Excel or CSV template that you can use to import into the calculator. And that makes it a lot easier for you to manage going through to figure out your numbers. Okay. So the first section shows the personal salary needs. So remember when I said that your revenue number is incomplete because it doesn't take into account what your life needs, what the business needs to support your life. Well, this is where it's going to tell you what your business needs to support. What life expenses does your business need to support? And that's called your personal salary needs. And we pulled that out of other salaries that are in your business expenses because we want the business to be able to pay you first. I support having a life first business. So this is proving that you will have a life first business by taking into account how much it actually costs to live your life right now. This first section also asks you how you're paid. That's very important because if you're paid by owners, draws, or distributions as a single member LLC or a sole proprietor, you are paying those expenses for your life. A lot of those expenses out of pocket, things like insurance and taxes, stuff like that. So, but if you're paid via a payroll or a W-2, usually things like health insurance and 401k and taxes, those payroll taxes are paid through the payroll. So it's very important to select what's your primary source of income. Is it a W-2 through payroll, or is it through owners, draws, distributions through just transferring cash from your business to your personal account. That's very important. Also, another feature is that you can look at your expenses on an annual basis or on a monthly basis. I suggest you look at them as on a monthly basis because you want to be able to track your expenses on a monthly basis so that you know if you're on track to hit your annual targets. So what we'll do is look at them on a monthly basis for this demonstration. So I'm going to show you, I'm going to make this a little bit easier, and I'm going to upload an expense file to auto-populate all the sections that I need. So it tells me that 17 items were imported. There are 6 owners paid items. There are 2 cost of sales items. There are 4 operating expense items, 3 balance sheet items, 2 product service items. And as we walk through each step, we are going to see exactly what those mean. So step 1 of your true revenue target calculator is personal expenses, as I mentioned. So it's things like housing, your rent, your mortgage, things like utilities, groceries, transportation, insurance, lifestyle, just general lifestyle. So I use a pre-formatted template, which you will fill out your expenses and then you can import them. But you can also, if you forgot something on that sheet, you can add an item manually. Let's say, hey, I just want to do, we have a pre-formatted drop-down list, but you can also add your own item. Let's call it fun. Let's create an item called Fun Things, and just click on Create, and it adds it, and you put in the monthly cost. Let's say you want to do $500 a month for Fun Things. It adds it to the calculator, and you have it there. So I'm not going to use that one. I'm going to use the sheet that I came in with, but I just wanted to show you that in each section, you can add your own items. So that's what I mean by this calculator is you can change it as your life changes, as your business changes. You can add to it, take away from, you can change the numbers, but you'll always know what your revenue target will be based on your input. So that's step 1. So step 1 is personal expenses, and that's filled in. Again, you're choosing how you're paid as a business owner. I chose here owner draws, and you can see that it's telling me that's my personal expenses are $6,000 a month. My annual, the cumulative annual for that is $72,000. Next, step 2 is balance sheet cash. What is balance sheet cash? This is a section of the calculator that usually it will answer the question when a business owner tells me that I've generated revenue, I've generated a profit, but I still don't have enough cash to do everything that I need to do. 9 times out of 10, the cash that they're looking for is in these balance sheet cash items. This is a section that shows expenses where you pay cash out of your business, but it doesn't show up on your profit and loss statement. So that's why on your profit and loss statement, you see you've generated revenue and you have a profit, but you may not have cash. It's because you have items that you're paying cash out of your that are living on your balance sheet. Things like inventory purchases, things like equipment purchases, the principal portion of debt payments, because the interest portion of the debt payment shows up on your income statement, your profit and loss statement, but the principal portion of your debt payments shows up on your balance sheet, where cash is going out, but it's not reflected in your profit, your net income. So it's things like that, and it's also where you're taking cash out of the business in the form of owner's draws. It shows up on the balance sheet. It doesn't show up on your profit and loss statement. So this section is very important. It will usually answer the question as to why you generated revenue and have profit, but you don't have enough cash in your bank account at the end of the day. So that's step number 2. And again, it's a running total telling me how much, on a monthly basis I require for my business to cover, and then on an annual basis. Let's move to step 3. Step 3 is cost of sales. Cost of sales are direct costs. So these are the costs that are incurred to deliver the service or sell the product that your business generates revenue on, right? So if you're a service-based business, these are the direct costs that it takes for you to deliver the service that you're delivering. Okay, these are things like subcontractors. So if you're looking to free up capacity for you may hire subcontractors to carry out the services, to perform the services that generate the revenue in your business. Specialty software. If you use a specialty software to deliver the service. Let's say you're a landscape company. These would be the costs of the staff that go and perform the landscaping services that generate the revenue. It could be the equipment purchases, the lawnmowers, the all the other tools that go into delivering that service. Those fall into your cost of sales. And in this section, we have industry benchmarks for service-based businesses. And when you fill this in, it'll tell you whether you're in, above the benchmark or below the benchmark or within reason. And this is important for when you're saying, when you want to know where you want to look at paying attention to your costs. You want to look at are you above the benchmark, and then you can analyze your costs based on those percentages. And we'll go more into that. I'll do some more in-depth videos on that to explain it a little further. But it's, again, giving you your running total on a monthly basis and on an annual basis. Step 4 are your operating expenses. Your operating expenses are the fixed costs. So the cost of sales are variable costs, and those costs are variable based on the revenue that you're generating. Your fixed costs, your operating expenses do not change. So it's things like payroll. So you have to pay that payroll whether you're generating revenue or not. You have to pay that rent, those utilities, whether you're generating revenue or not. They're not based on the amount of revenue you're generating. They're fixed costs. So it's it could be things like owner's pay. But remember, we took owner's pay out of this calculation because we need your business to pay you first. We want you to have a life first business, so we pulled those expenses out of there. So this is things like marketing and advertising. Again, I said rent and utilities and professional fees like legal, accounting, things like that. So that's what this section is. Step 4 of the true revenue target is your operating expenses. And again, we have industry benchmarks to show you for a service-based industry. Are you in target or out of target? Because again, when you're looking to analyze your expenses, if you had to cut expenses or something like that, you would look to where you're out of target. But as you can see, this shows that you're in a healthy range, so you're okay there. Again, it's giving you a cumulative total of your expenses so far, and you're always going to know where you are. Step 5 is your desired profit target. Okay, this is important because you don't just want to generate revenue and so that it pays for expenses. You also want to build reserves and reinvest in your business. If you're thinking about selling your business ever and you want to increase the value of your business, generating a profit to reinvest in your business to add to your equity and your retained earnings is very important. And no matter how big or how small you make this percentage, I believe that you should always have have something going to profit, even though we've already, paid all the expenses and everything. You still want to have something going to profit so that you can build equity in your business. And again, we have industry standards for conservative amounts. Even if you were just doing 10%, you can use this slider to go down to 5%, or you can also fill in this number for whatever number you want it to be. But here I have some industry standards based on conservative numbers, a healthy business or a strong business. But you can choose whatever you want, however big or however little you want to choose, but always choose something. Even if you wanted to take more money out of your business, that's the point after you've already paid all of your personal expenses and all that. If you wanted to take more money out, you would take it out of this number. So you always want to be generating a profit. And I must note that this profit target is based on a percentage of your revenue. It makes it a little bit easier to calculate that true revenue target. It's based on a percentage of the revenue that you're generating. Step 6 is your tax obligations. And this is another one of the most important steps that you're going to fill in. And a lot of times we're saying, okay, I generated, revenue, I covered expenses, I may have generated a little profit, but I didn't set aside money to pay tax obligations. The federal, the state, the municipal tax obligations that you have, maybe even sales tax, you want to set aside money to cover those. And this section also asks you what type of business entity you are. How is your business taxed? Are you taxed as a pass-through entity? Are you taxed as a C corporation? That's very important because it tells if you're a pass-through entity, you are taxed on your profits, and that flows up to your personal tax return. So it's very important to indicate on the calculator how your business is taxed. For this purpose, I'm choosing a pass-through entity where profits flow through to your personal tax return. Again, I have some typical tax rates. You should consult with your tax professional, your tax preparer, your CPA to figure out what your tax rate is. But if you do not know, there are some defaults here. Or again, you could use the slider and choose your own number, or you could fill it in and you could say, I want to say 20%. Or you can choose down here and say use 20%, you can use 25%, you can use 30%. Today we're going to use 20%. We're going to go to the lowest one. I want to see what the minimum revenue is for that typical rate. I want to see what my minimum revenue would be. So that's step 6, and all your tax. And it's a cumulative tax. Again, this is based on a percentage of revenue. To make the calculator a little bit easier, the percentages are based on a percentage of revenue generated. Step 7 is where we're going to show how much revenue you're actually generating. This shows your product mix, your service mix. What services are you providing? How many are you providing? What are you charging? What is your price? And then this is going to calculate how much revenue you're actually generating. So it's showing how much revenue you're generating on a monthly basis, and it can show you how much you're generating on an annual basis. Again, as with all of the other steps, you can download a pre-formatted template and upload it into here individually. But remember, in the first step, I did an all-in-one template where it automatically uploaded it. So here you see that this example shows some consulting packages and some retainer clients. Again, you can add in your own from a drop-down list, or you can enter in your own names and prices if you would like. So once you fill in everything and it's filled in correctly, you will see that it'll show the gap. If you miss a step, it would give you a a message saying, hey, it looks like you forgot to fill in this part. But as you can see here, it shows that the current revenue per month is $18,000, but the target revenue based on the expenses and everything else that was put in needs to be $28,160. So the revenue gap is $10,160. And once you see this, now you know how much revenue you should be generating to cover everything. And it may be a surprise. This is where some business owners are shocked to see this, but it's not an issue. If you can see it, you can solve it. Because at this point, it just becomes a math problem. $10,000 a month does not mean that you need to go get 100 more clients. If you look at this, $10,000 might mean that this business just needs 2 more consulting packages per month. This $10,000 might mean that this business needs 5 more retainer clients per month. But if you remember, in the cost of sales, there were subcontractors that the business owner engaged to free up some capacity for the business owner. So the business owner may have some capacity to take on more clients themselves, and they don't need 100 clients to satisfy that $10,000 a month. At that point, it's just a matter of figuring out how to generate revenue in your business. And that's a math problem. And it could be that the owner has to develop a system for generating revenue, but it's not insurmountable. But at least the owner now knows, okay, if I can figure out how to get $10,000 more per month in my business, I should be able to satisfy every obligation, every expense obligation, pay myself first, and then pay my business expenses, and then pay my tax obligations, and generate a profit if I just generate $10,000 more per month in my business. So that's what the calculator shows. It shows this is where my life and my business are right now, and this is where my life and my business need to be. Now you just solve for what you need to do to close that gap. And I say 8 steps because the 8th step is the most important part of this calculator, because this is where you see everything in a snapshot. You see your annual revenue target. You see how much that needs to be per month. You see all the breakdown of the expenses that you entered. Again, this section shows your cost of sales, and it shows what percentage of your sales are your cost of sales, and it shows your gross profit margin. A lot of businesses will track what their gross profit margin should be as a key metric. So the calculator will tell you that, and it'll tell you whether you're in range. It shows you your monthly gap analysis and your annual gap analysis. And down below here, it helps you understand your results. What percentage of your revenue it goes to your cost of sales? What percentage goes to operating? What percentage did you save for profit? What percentage did you save for is going to owner's draws and taxes? And then your revenue mix. What percentage of your revenue is made up of consulting packages? What percentage of your revenue is made up of the retainer client? So it gives you a breakdown of all these different metrics that you may want to track to better understand your business. Okay. Now, this section explains a little bit about how you can close that gap. Again, you don't need 100 clients to close the gap. There are drivers of revenue. There are 5 drivers of revenue, and there are many, many drivers of those 5 drivers in your business. So it could be, how many ideal clients are you reaching? That means how many leads, how many qualified leads is your business generating? And qualified leads are people that are willing to pay for your service, that need your service and can afford to pay for it. Those are your qualified leads. So it could be, how many ideal clients are you reaching? How many of those leads actually are converted into paying clients? How often? So these are things that you should be looking at immediately to close that revenue gap. And, this is also what we do in our community, the financial storytellers community. We help you understand your revenue gap if you have one, and then we help you take the steps to close that revenue gap. So those are the 8 steps I use to build a reliable revenue number. This is not for you to guess. It's not to just have a goal that sounds good. This is a number that's actually based on what your business needs to support your life and your business. And once you have that number, everything changes, because you're going off of a real number. You can actually see it. You're making decisions that are based on real data. So in the next video that I do, I will take you through exactly how this works using a sample business. I want you to see how this works in real time. And I want you to see how you can actually apply it to your business, how it's actually applied to a sample business. And then you can see, oh, this is how it will work in my business. So if you want to try this calculator for yourself, you can go to calculator.financialstorytellers.com. And I'll also put the link in the description below. And you can build your own number. And, I want you to know, I want you to let me know in the comments below if this has been helpful for you. And if this is something that you want to see and want to use, subscribe to the Financial Storytellers YouTube channel to stay tuned for more videos like this, where I walk you through how to calculate your true revenue target and how to close that gap, how to solve that math problem that you might have. I'm Jennifer Bright. I'll see you in the next chapter.